Would you like to invest in Tesla, but aren't sure if it's the proper time? Don't let the recent steep drops in Tesla's stock price deter you. This might be a great chance to jump on the bandwagon and retire rich from future gains thanks to the company's forays into new markets and strategic alliances. Some analysts have predicted that the stock price could reach $830 by 2025 and $1,000 by 2030. If you want to know how much Tesla stock you'll need to retire comfortably and live life to the fullest, you've found the perfect video. We'll go into detail on this issue, so make sure to subscribe to our channel and give us a like. Across the Americas, for a family of two, the average monthly expenses are over $5,000 or $60,000 per year. However, if you're planning to retire alone, your expenses will be around $3,000 per month or $40,000 per year after accounting for a 3 inflation rate until 2030. If you're looking to enjoy retirement to the fullest and would like to withdraw $5,000 per month, you can consider investing in the stock 500. This particular index has an average annual return rate of 7. So to reach $850,000 by 2030, you'll need to sell about $85 worth of Tesla shares and invest the proceeds in the 500. With an expected return of 7, the funds should last for at least 50 years. Using this data, we can find the optimal time to retire with 850 K-Tester shares, an average yearly return of 7, and a monthly spending budget of $3.02. Using the lower end of these projections, we can calculate the number of Tesla shares you'll need to retire comfortably, taking into account an index fund tied to the SP 500 index and annual return of 7. Based on the current trend of FSD price increases each year, it is anticipated that by 2030, the cost of fully self-driving FSD for Tesla vehicles will be approximately $28. This shows how confident Tesla is in the potential success of FSD. On the other hand, if FSD turns out to be as successful as predicted, it will be a substantial source of revenue for Tesla, effectively acting as a cash machine. The revenue will be generated from the sales of both vehicles and FSD, assuming that the average sold by 2030 will cost $50,000, assuming a conservative profit margin of 25%, and net income from each vehicle sold will be around $12,500 by 2030. However, it is highly unlikely that 1.5 billion shares will be outstanding because Tesla may choose to reinvest in the company through buybacks or dividends rather than diluting its stock. Earnings per share, calculated using the number of shares outstanding prior to the stock split. And that price earnings ratio is maintained at a conservative 40. Nevertheless, it is anticipated that Tesla's stock price will surpass 50 by the year 2030. Since other industries like Tesla Insurance do not have enough data, the analysis solely takes the food and auto sales sectors into account. Virtual drivers and Tesla is bot-based on the information that is now available. Let's talk about the number of shares you'll need to retire in the worst case scenario. The data that is supplied is a reliable minimum estimate. It's hard to believe a car manufacturer sell that many cars. But if Tesla sells 30 million vehicles by 2030, more feasible number than 55 million, their stock price would be approximately $450. With a market worth of about $20 trillion, the stock price would be around $13,000 per share. Due to the large number of outstanding shares, the market capitalization is currently high. However, I was expecting a decrease in the future. On the bright side, stock prices should stay fairly stable. If you want to live off $5,000 per month for the next 50 years, you'll need $850,000 by 2030. If all goes wrong, you'll only need 297 shares, which will put you out just over $59,000. If you put $59,400 into an investment, today it could grow into $850,000 in 8 years. With that amount, you can put it into that 500 and expect a return of 7 or more. After that, you're retired. Based on the base case, you would only require 230 shares, $47,000, provided you are determined to avoid unnecessary spending and invest your money effectively. They have the potential to sell 25 million automobiles in the next 8 years, which may increase the value of this investment more than 10 times. If they sell 30 million, the value of this investment might rise by 66 times. Investing 48,000 today could generate 850,000 by 2030. Assuming you reinvest your Tesla gains in a SP 500 index fund, this is all based on your future investments. However, if you prefer to take a lump sum approach and not reinvest your gains, recent surveys indicate that the average person needs $1.07 million to live comfortably into retirement. How comfortable you can get with this amount depends on your spending habits and financial goals. With $1.07 million retirement savings, you have a substantial nest egg that, if managed properly, can provide a comfortable lifestyle, assuming you have no major debts or expenses. Assuming a foreign annual withdrawal rate or retirement portfolio with $1.07 million in assets can produce $68,000 in income. The amount can change depending on how the market is doing and how you want to invest. Your retirement comfort level and the specifics of your lifestyle and financial situation will determine if this sum is sufficient. You can be quite comfortable with $68,000 per year if you have modest living expenses, don't plan to travel much, don't have major health problems, and don't have any dependents to support. But if you have more significant expenses or want a more lavish retirement, you might need more savings to achieve your goals. Okay? If you're already invested, my recommendation is to not log in. If the market experiences another 50 crash, when it might happen is anybody's guess, but it's certain to happen given the resiliency of the US stock market. Note that our analysis is based solely on FSD and automobiles such as Tesla Insurance Robocab. Since there is a dearth of hard data on Tesla and solar energy storage, we have limited our research to Tesla's FSD vehicle sales. Being cautious and focusing on the worst case situation helps me avoid the regret of putting too much stock in the best case scenario. So that's how I can normally operate. In the worst case scenario, all you'd need is 300 shares to be comfortable for the next 8 to 10 years. If you decide not to sell by 2030, the value of your 800,000 shares would probably rise even more in the next 5 years. Whether Tesla is a fantastic investment, the company isn't going anywhere anytime soon because it isn't a passing fad, and we anticipated it to continue playing a major role in the global problem-solving initiative for a long time. Based on the data, it appears like this would be an excellent time to buy the stock. Several bull markets have been ignited by Tesla's success, even though some analysts believe the firm is overpriced. This has led to improvements in production and expansion in the industry. Customer base pocket investors think that the EV stock price might surpass $830 by 2025, thanks to the company's partnerships with companies like Lucid Rivian and Neolac and its expansion into new markets. Although Rivian is a more recent player in the electric vehicle market, has quickly become a formidable competitor to established names like Tesla. In contrast, Neolac is an electric vehicle manufacturer based in Europe that prioritizes environmentally friendly transportation options. Despite their differences, the companies are all contributing to a bigger trend towards electric vehicles and sustainable transportation. Cathie Wood and others have predicted that Tesla's stock price will be over $1,000 by 2030, and judging by their resumes, they might be onto something big for the company in the last 2 years. After delivering 108,600 autos in the most recent quarter, the business recently exceeded consensus forecasts. Producing efficient solar panels is only one way Tesla is working to increase the availability of green energy. A system of rapid charging stations, large-scale energy storage solutions using rechargeable lithium-ion batteries to make green energy solutions more efficient and affordable. Tesla is also spending a lot of money on ROD. New battery technologies are being developed by the firm and is also investigating potential avenues for incorporating renewable energy sources into its infrastructure. In the long run, Tesla hopes to lessen the world's reliance on fossil fuels and hasten the shift to renewable energy sources. A lot of people dream of having a comfortable retirement free from financial worries, but not many actually do what it takes to make that goal a reality. Even after retiring, many people still need to set up a retirement plan. You can determine how many Teslas you'll need to retire comfortably by looking at your yearly expenses. Leave a comment with your thoughts, hit that like button, and subscribe. We'll see you in the next video.